All right, Elliot, it's good to see you today. How are things going over there in the train land over there?
Things are going well. This is, I think, probably my favorite time of year just because it's not too humid and not too hot yet, and it's also not cold.
Yeah, well, depending on where you're listening from, your definition of hot and humid may be a bit different. I know it's not like Texas hot here, but it does get a bit more humid and sticky than it does down there. But at least it's not like 110 degrees right now.
Fair enough. How are you doing
Yeah.
today?
I'm good. I'm good. Enjoying that spring weather, just like you said. But yeah, we've had a lot of storms going on around lately, and I think a lot of people have had big storms. So we thought it'd be fitting to talk about property and casualty insurance today. And a lot of those pieces include like home and renters insurance, auto insurance, and just a general discussion around what liability looks like when you're taking part in owning and using these things. So where do you want to
Everybody's
start?
favorite topic, right?
Well, everyone has it. I know people don't like paying for it, but they certainly do like having the right plan in place when it comes time to use it. So we promise you this isn't a pitch for insurance. We're not going to be Geico sitting here telling you can save 15% or more by listening to this 15-minute podcast. But yeah, we think it's a really important topic, and I certainly have some stories that I can share as we go through this episode, as to how it looks when you actually have to use these coverages. And maybe you have some stories of your own, Elliot. But where do you want to start today?
Should we start with maybe homeowners insurance? Start there and renters insurance as well?
Yeah. Everyone needs a roof over their head, right?
Preferably, yes.
Yeah.
um, so, homeowners insurance, we always like to talk about this, or renters insurance of protecting either your house, or in the case of renters insurance, or also homeowners insurance, protecting your possessions and what's inside. And I think what catches people off guard sometimes is the amount of possessions and what it would cost to replace that. I had a conversation the other day, just casually, it wasn't client related or anything, where they were like, I don't think I really need renters insurance, or my daughter doesn't need it. And I was like, well, hold up a second. I think if you looked at the number of possessions that you had and what it would take if you had to replace every single thing on a day, I mean that might be $20,000, $30,000, even if you don't own very expensive stuff.
Yeah. Yeah, it can add up really quickly. And especially now, nowadays where most of us have one of these floating around, like, I mean, that's probably $1,000 if you have to go buy a new one, right? Like, let alone multiple devices or a TV or couches or things like that. That can all add up really quickly. So yeah, how did that conversation go? Like, what was the overall outcome of that conversation?
We made some progress, I think. They still were claiming they didn't have very expensive possessions, and I didn't want to get too deep into it, but I'm confident if we went around their daughter's apartment in this case, there would have been a good number of things that it would have been tough to replace them all at once. But I think the more important thing are liability limits within whether it's homeowners or renters insurance. So if we think about someone's at our house, maybe we're entertaining for a party, and someone trips on a rug or the tile's not quite level or whatever. Accidents happen, your bookshelf falls. Hopefully your friends aren't going to sue you, but if they're badly injured, they may sue you. Or maybe it's an acquaintance who doesn't really care. No one ever thinks that they're going to get sued, but in our pretty sue happy society, having higher liability limits, at least from my perspective, is pretty important. So sometimes people might only have $100,000 as an example, and it wouldn't take much to go through that limit. So oftentimes when we're talking about folks, we're talking about raising those liability limits, because if we look at the premium, it's often not very much in terms of an increased cost, but the coverage you get is quite a bit. What do you think?
Yeah, no, I agree. And it was funny. I was just making some resources to share with clients. So I went through my own policies, and for the $300,000 of liability coverage on our townhome here, it's $26 per year for that portion of the coverage, right? But a lot of it, like you said, is the actual cost for something like a homeowner's policy is much more like, how do you replace the structure in the event that it's destroyed or severely damaged. And that's something too where I think a lot of people, especially if you're, like us, where maybe your first home was, call it the quote unquote starter home, but you start to, do some upgrades, do some, renovations around the house or just general improvements, you might not realize that a lot of those coverages are based on a, per square foot of replacement costs. So as you do things like that, or I had a client last year who built a big addition, like a sunroom, deck type thing, making sure that you reestablish what it is going to cost to fix your house or replace those things in the event of a major loss is really important. And the same goes for, like you said, with the personal possessions, right? Like maybe you start out with less things in the house, but maybe you have a kid and now there's more stuff. And, you just have to make sure those limits are raised or reviewed at intervals to make sure that you're not setting yourself up for a big issue down the road.
Yeah, Matt, you were talking about the dwelling coverage specifically. So if you have your own insurance policy in front of you, or go download the PDF, the declaration showing your coverages, look at your dwelling coverages, take what that figure is, divide by the square footage in your house. Could a contractor come in and rebuild for that? I mean, you brought up a good point about improvements. The number one conversation I've been having around homeowners insurance policies is just the increased cost of labor and materials the last few years. Clients may have not had any single improvements, but they might still be severely underinsured just because the cost of replacing a house is very expensive now. Maybe in the past you could have done it for $200 a square foot. Now it's maybe $300, or where I'm from in Seattle, there are some contractors that won't come out for less than $400 a square foot.
Yeah, yeah, and two, prices for building materials and things like that, they fluctuate over time. I don't think this is something where, you need to pay attention to the lumber market, right? But if you're hearing those headlines and you're hearing that things are getting more expensive, I think it is a good time to reach out to, an independent insurance agent and see what they would say, because they have so much data on what they're paying out in claims to replace things, right? And we'll get, I think we'll get a specialist on for the next episode to talk about how claims go and, what they're seeing and what trends they're seeing. But, even here, initially we had a $40,000 roof repair. And this is an ongoing, thing where they denied the claim, but we ultimately were able to get that appealed. And rather than having to pay $40,000 to replace the roof across our 4 units of this townhome, it's, now we're just going to pay our $2,500 deductible. Like, really, really huge when you need it, right? To have the right amount of coverage and the right riders and provisions on those policies too. Especially here in the Midwest, like, a lot of people have basements, so making sure that you have, some degree of water damage, right? You might not necessarily need a flood policy, but, making sure that you have adequate coverage for water backup in the basement. Maybe you do need a flood policy if your area is prone to that. But that's a really, really good question for the insurance agent that you work with, just to know what happens in your area and what the risks are, so that you don't find out that an event isn't covered.
Yeah, that's really important. And I just want to highlight that, Matt, that most standard policies don't include water backup coverage, whether that's water or sewer or something else. And it's a pretty common type of claim. So go check that on your policy after this.
Yeah, or even like for renters, like most apartment buildings nowadays have sprinkler systems. Like that may be considered water damage that's not covered under your policy. So asking those types of questions and letting the insurance agent know like what is specific to your building is going to help them tailor that policy, correctly for you. And that's something where, I guess this is my first story. We'll come back to the auto one when we get to auto, but I was living down in Dallas when the Texas freeze happened in 2021, or yeah, it was 2021, right before I started the firm. And the power was out for 48 hours because it was so cold, and the entire sprinkler system froze because in Texas, they don't usually have to worry about this, but they run the pipes on the outside of the building. And so that was actually covered under my policy because it was due to something other than a sprinkler system failure. It was due to the freezing and then the rapid unfreezing of the pipes, and the pipe just burst through my wall. So my whole apartment was covered in like 6 inches of water, and I was on the 3rd floor, so I can't imagine what was going on below me. But I think when all was said and done, I had like $9,000 of personal property destroyed. And one thing I want to caution everyone on too, as you review these policies or maybe reach out to an insurance agent, it pays to have the replacement cost coverage for your personal items, not actual cash value. Because in order just to replace like my one bedroom, living room size apartment, um, you know, I would have been out like $2,000 or $3,000 in terms of what they would have given me to, you know, actual cash value for my belongings versus what it costed me to replace them. And, the pandemic was a really good time to illustrate that because furniture was expensive because everyone was buying furniture. Electronics were super short because of the chip shortage and all of these things. So prices had gone up compared to what the insurance company would have just given me based on what they deemed those things to be worth.
Hey Matt, maybe for those who aren't as familiar with these terms, can you maybe
Yeah.
give an example of actual cash value versus replacement cost using electronics or something else?
Yeah, so a really good example of this is say you buy a laptop that has like a 1 terabyte hard drive, has, certain specs on it. If that laptop were to be destroyed and you have actual cash value, you know, coverage on that laptop, they're going to say, okay, this computer it was $1,000 when you bought it. It's a couple years old now, so it's really only worth like $700 or $800 now. So we're going to give you that $700 or $800. In replacement cost coverage, they're going to go to the market and they're going to say, okay, in order to replace a 1 terabyte hard drive laptop with the same specs that you have on that laptop, it costs $1,200 now. So instead of that $700, we're actually going to let you go replace it with something identical in, size of screen and features of that laptop. And we're going to write you a check for whatever that ends up being, right? So essentially think of what would it cost to replace with similar, specifications. This is really important too for like clothes, right? Like if you have nicer clothes, to go be able to buy those new versions of those nice clothes. Or electronics are a big one, but even things like couches, right? Like that all gets more expensive, and we all complain about inflation, but if you complain about inflation, you should make sure you have replacement cost coverage on your insurance, because that's really what it's there to protect you from, is having to make up that difference in the cost of what it's worth today, that couple-year-old product, versus what it would cost to replace it now.
Great. Good clarification, Matt.
Yeah. Yeah. Anything else on the homeowners or renters side?
I think just the last thing that I would say is if you have any just one expensive things or expensive group of things, sometimes you need to schedule that within your policy. A
Mm.
lot of policies have limits that go up to maybe $1,500 to $3,000 or so. So say you really like cameras and you own $10,000 worth of camera gear, or you own a really nice bicycle. That may be as a group only covered cameras, just the cameras for a second. Say you own 3 different or 4 different pieces that add up to the 10,000. It may only be covered to the $2,500 or whatever the limit is. So common things are like antiques, jewelry, firearms, art, think about anything expensive in your house that might need to be scheduled specifically in the policy, and it might cost a little bit extra.
Yeah. Electronics too. Most policies do have like a per item limit. So if you are, a consumer of higher end electronics, you might just want to let your insurance agent know. I would say anything over, $1,000 is probably safe just to tell your insurance agent about, and they'll help you make sure that that's, the proper coverage. One last item on that is, oh man, it just slipped my brain, but oh man. Oh, I got it. So for actually going through a claim, what was really helpful for me in, proving the loss to the insurance company, but also helping myself remember all the things that I had, is a really simple thing you can do is just walk through your house or through your apartment. We all have cameras on our phones. Take a video of all the things that are there. For me, right, the flood didn't like destroy anything other than making it waterlogged or, shorted out in terms of electronics. But if you have a fire or like a tornado or something like that, those possessions may be gone, and it could be really, really hard for you to piece back together exactly what you had. So taking those videos, uploading them to your Google Drive or your iCloud can be a really helpful way just to help spark your memory if you do have a major loss where the things aren't there anymore.
That's a good reminder. That was recommended to me by an insurance broker years ago, and I'm actually going to make a note now for when I move into my house that that's the case, that I need to do that.
Yeah, because I mean, we like spreadsheets, but even I don't like putting all of the things I buy into a
Not going to
into
happen
a
for me.
spreadsheet. Yeah, it'd be a good way to be conscious of what you're spending money on, though, right? So
Yeah,
maybe a side.
not how I want to spend my time.
No, me either. All right, so yeah, I think we've really covered like the main points on homeowners insurance. Let's move on to auto insurance. So where should we start with that, Elliot?
What are the major things that you like to look for, Matt?
I mean, I think liability is a big one. Property damage is one that I think is maybe underlooked at these days. So yeah, why don't we start with just general liability? The way that claims are, I guess, deemed when it comes to like a judgment against you or like a bodily injury or property damage can sometimes be a bit complicated. Maybe we should have like a car accident attorney come on the show too and talk about that process. I've been through that, but the science to me is not a science. It seems very arbitrary. So maybe they can give us some more insight there. But really, what I like to talk about with my clients when we go through this topic is if you were to get into a car accident where you're at fault, we don't really have much, control over who it is we're running into, what it is we're running into, sometimes how hard we run into those people or what happens. And I think this is really just something where I don't think there's a thing as too much. I mean,
I'm
if it's
with you.
cost if there's cost prohibitive reasons why you can't have too much, certainly, but it can add up really fast. And nowadays, where this is where the property damage liability comes into play, like a new car, right? I'm sure we've all seen the prices of new cars where it's very hard to find something that's, I would even say, less than $25,000, but a lot of SUVs and even some of the like common everyday crossover size SUVs, like you're talking 40, 50, up to 80 to $100,000 for most cases. So if you only have $50,000 of property damage coverage and you total someone's car, it could really blow through your limits quite quickly. Not to mention if you're running into other things. Is there anything you'd want to chime in, like on the property damage side?
Yeah, so I this has been a frequent conversation now that I used to think maybe 100,000 was okay, but for people in major cities that are regularly driving around, or if you visit a major city, it's not uncommon to run across cars that cost more than $100,000 these days. So we're having conversations about, does 250,000 make sense? And if you look at the additional premium, it's not that much more expensive for a lot of folks. So maybe it does make sense to go up to that 250,000 range, because you hit a Lamborghini, a Ferrari, I don't know, Tesla Cybertruck, or whatever you're running into. It may be worth more than $100,000, and you may come up short. And now you owe 50 or 75 grand on top of what your insurance already paid out.
And that's assuming you only hit one car, right?
Yes,
Yeah,
and you're only hitting cars, that you're not hitting something else entirely, right? You hit a
like a
lightning
house.
pole or something else.
Yeah. 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 I know those are somewhat extreme examples, but again, the truth is we don't know how and when or why these events are going to unfold. We're not here sitting here saying that you're a bad driver and you're just going to slam into a bunch of things, but sometimes people have like a seizure or a medical event that, they just lose control of the car, and that's not really something you chose to do or, you know, really expected to happen, but those are things that can happen. And I would agree with you that the coverage is so cheap on average that I think it's better to be safe than sorry and not set yourself up for a massive hill to climb up or hole to dig out of if you do have the claim.
Yeah. And then the other thing I look for is underinsured or uninsured entirely. Sometimes I see people who have lower limits for that than they have for their own that would pay out for someone else. And that's never made sense to me. Oftentimes we want those to match. It doesn't matter if someone else hits you or you hit someone.
Yeah, and what is it, Elliot? What is underinsured or uninsured?
Yeah, so if you look at the stats on how many people are driving without insurance. It's actually quite scary depending on what state you're in, because some states are very high, some are lower. But basically, a driver doesn't have insurance or doesn't have enough insurance if you're in an accident to pay that out. Your insurance can then step in to make up the shortfall. So if you consider, let's say it's 10%. I don't remember the exact statistics for driving without insurance. What are the odds somebody hits you without insurance? Well, now there's nothing to cover you other than your own insurance. And you could try to sue them, but chances are there's probably not much to sue for.
Yeah, and that if you didn't bring that up, I was going to bring that up. Where I mean, again, we're generalizing here. Like we understand that people are in sometimes challenging economic situations, but typically the people who don't want to pay or can't pay for insurance are the people who aren't going to have anything to go after in the event that you do need to go after them to make yourself whole. And that's just really like it is one of those weird adverse selection things where it's almost just better to bank on yourself, right? And put that into your control versus hoping that the other people have insurance. And that's something too where I get this question a lot from clients, like, aren't people legally required to have insurance? And the answer is yes, in some states, right? I think it is in most states, but usually those limits are very, very low, and
Extremely low.
it's not going to replace your car if that's what you need to do, or make up for lost time at work, or hospital bills, or those types of pieces. And so it's really just good to take care of that risk yourself. And it is moderately more expensive, but at the end of the day, I think it's totally worth it.
Total agreement.
Yeah. And that goes to the liability side too, right? And, I kind of breezed over the bodily injury and, liability side there, but, really making sure that you're protecting yourself with higher limits, or what we'll talk about next with an umbrella policy. It's so cheap. I mean, again, I just did this on myself, but I think it was like $116 per year for each $100,000 of coverage that I have on my policy. So like for $500,000 of liability on our auto policy for both my wife and I, it's like, the actual liability component of that is like 500 some dollars a year. And that's so worth it to not have to worry about paying out a $500,000 claim out of our own pocket, which would mean the house is gone. A lot of the money we've saved outside of our retirement accounts is gone. Probably some wage garnishment there. And that's just something where it can add up really fast. And I think that's where there will be some value to maybe seeking a personal injury attorney to come on the show and talk about how quickly these claims can add up if they do. And the way I frame that to clients, whether it's just about homeowners liability or auto liability or having that umbrella policy, really what you need to think about is you're paying this liability insurance to have insurance company attorneys fight for you, because they have the obligation to keep the claim below the limit. That's their duty and obligation to you as a policyholder, and it serves their own interest too. So if you're trying to find a way to stomach those premiums, just know that you're really just paying a low monthly fee to have big time attorneys fight for you in the event that you need them to fight for you.
Well put.
Yeah. Any other coverages on auto coverage that you'd want to talk about? I mean, there's a lot of
Nothing's
little ones. Like,
There's a lot of little ones. Nothing. I mean, the only other thing I might throw out there is rental car coverage. If you don't have that, that might be worthwhile having. That's just one of those things where car parts are taking longer to get. It's taking longer to get appointments. It's not unheard of for people's car to go into the shop for 2 months. And if you can't get around in other ways, whether you have a second car or a bus or walking, whatever you're doing, you might be paying out of pocket for a little bit for that rental car. So that might
yeah.
be something to include.
And it's story time number 2 for me today, I guess. Maybe have you had a auto insurance claim, Elliott?
I've had one and it went smoothly, and it was, to keep this short story, I was parked outside of my townhome. Someone sideswiped at night. No note, nothing. Filed with my own insurance carrier. So thankfully I had coverage, because again, it's a perfect example of they didn't leave a note. I can't go after them. I asked neighbors for doorbell cameras, that sort of thing. Nothing came out. So I had to file that with my own insurance company, and it went smoothly, but it's still pain.
Yeah.
You know, it was
Yes.
$10,000 worth of damage, but it was only sideswiped. But they pushed it up against my garage and got both sides of it, so that's why it was so large.
Yeah, paint adds up quickly on cars.
Yeah.
And one thing too, I see a lot of people like not know the difference between collision and comprehensive
Oh yeah.
coverage on the car. If you look at your insurance policy, you'll either have both of those coverages with a separate deductible, or you might just have one or the other. So collision is very much something like what Elliot was talking about. If you run into something or you know cause damage to someone else's car by running into it. One note for those of you in the Midwest or maybe, a wildlife prevalent area, hitting a deer is not collision coverage. That's comprehensive. So if that's something that scares you, you should definitely review that policy to make sure you have that comprehensive coverage. But comprehensive is also going to cover basically anything outside of a collision. So, like theft, I had my catalytic converter stolen when I was in Dallas. Like went to my workout class in the morning, did it for 45 minutes, came out, my car sounded like a race car because they cut the catalytic converter out, and that was like a $4,000 repair. So, that again was nothing I did other than park my car. But having that comprehensive coverage allowed me to just pay the $500 deductible or whatever I had, and I just had a client lose a car to a deer strike incident. But having that comprehensive coverage, that's a huge thing to have just in case the unexpected does happen,
Or a large hailstorm.
or a large hailstorm, or a fire, or who knows what, right?
Yeah.
Yeah. But yeah, anything else on auto that you'd want to hit? I know there's a lot of like nickel and dime coverages, I call them, where they're like, they're just trying to squeeze money out of you, but I
Those are
don't
the
think
main
we need
things.
to
If you
go
get
there.
the bodily injury and the property damage and the underinsured or uninsured right, the rest of it will usually fall into place. Okay.
Yeah. Yeah, so let's move on to the final bit here,
My
umbrella
favorite.
insurance. My favorite too. It's the easiest recommendation I ever get to make to my clients, and it surprises me like how few people know what it is or how it works, even though it's kind of in the name, isn't it?
Kind of. I don't
Yeah.
know. It's always been a weird thing for me, but I'm with you. It's usually a pretty easy recommendation, and I'm surprised more insurance agents aren't talking about it because it is a great coverage.
Yeah. So what we're talking about is umbrella insurance coverage. And really, when you think about umbrella insurance, it's not that you have a really expensive umbrella that you're insuring, right? But it acts as an umbrella over all of the other liability coverages that you have through, not through everything, but if you have a boat or something like that, it usually goes over that, or RV, or outdoor toys like ATVs, that kind of thing. So it really just provides an extra blanket of liability insurance on top of your existing coverage. So if you had $500,000 of liability on your auto insurance and then had $1 million umbrella policy, that umbrella policy is not going to kick in until you exhaust the underlying coverage wherever you have a claim, and then you're going to have that extra $1 million, or as I use in the auto example, right, you're going to have the attorneys fighting for the next $1 million of your claim before they can start coming after your assets and all that kind of fun stuff. So um, is that a fairly simple way to explain it, Elliot? Anything
That's a
you'd want to
great
add?
That's a great way to explain it. I might just add that depending on the insurance carrier, the attorney fees may or may not come out of that $1 million in your example. That there are some that say, okay, well, if attorney fees are $200,000, you really only have $800,000 now. Some are on top, so sometimes it's the full million and attorney fees are outside of that. But just something to be aware of as you select the amount. The other thing I might say is sometimes there's a rule of thumb, and rule of thumbs are okay sometimes, but oftentimes people will suggest having an umbrella policy for your net worth. That can sometimes go okay. But this is where working with a financial planner or working with an insurance agent or broker to understand what makes the most sense might be better, because you could have a very young person that is not earning very much money today, but maybe is in a career path to make a lot of money. And you talked about wage garnishment earlier, that if they were to hit someone, say that person was paralyzed, and they sue them, well, there's not a lot of assets to sue for today, but there are a lot of wages that they could sue for later. So that's just a very simple example of where that net worth could go wrong.
Yeah. And one reason too why you might want to go a bit higher on the umbrella policy is it's substantially cheaper than, in most cases, than just really adding a lot of limit to your home or your autos separately. Again, I just did this yesterday, actually, making this infographic for my clients, and I'll have to share that when it's done. I'll
Yeah.
share it in the show notes. But like for $100,000 of coverage on my umbrella policy, it's $22 per year. For auto for 100,000, it's $116 per year. So it's actually like 1/6 of the cost per $100,000 of coverage. Now, again, it's going to vary based on state and insurance company and your personal situation, but I just wanted to throw that out there. That's why it's such an easy recommendation. You can add a ton of coverage on top or alongside of your current coverages for a fraction, quite literally, of the price.
Yeah, it's just so cheap that, and it's not dollar for dollar. So the first million is usually the most expensive, and then it usually gets cheaper for each additional million. That's just something else to keep in mind.
Yeah, but I mean, my $1 million policy is like $220 a year or
Yeah,
something like that. So fairly inexpensive for what you get in terms of protection. But yeah, it's just a good thing to consider, and that's something too, where if you are in a high earning career or you have a lot of human capital value, as much as I hate that term, of income that you can still earn throughout your career, that might be something too where you want to slap on the underinsured or uninsured motorist rider on that. It's going to make it a little bit more expensive, but it can give you some upside protection for yourself if someone were to not have insurance and cause severe damage to you and in your future earnings.
definitely.
Yeah. Anything else you'd want to close us out with, Elliott?
Just review your insurance. Maybe get, you don't necessarily have to do it annually. I think annually is a good thing, but at least every couple of years, make sure you're reviewing it because life changes, and sometimes there's a small adjustment and sometimes it's a super large adjustment that you need to make. So just carve out half an hour, go through it with your insurance agent, and just have a little more peace of mind.
Yeah. Yeah. I love that. And I think in the next episode, let's bring on the insurance professional we use if she's willing, and we'll ask her some questions and leave her contact information in the show notes so that if you want, you can reach out and get your quotes reviewed for free and see if you might be able to even get more coverage for equal or less than what you're paying for now.
Sounds great.
All right. It was good to see you, Elliott. Have a good one.
Likewise. Enjoy.